speaking on that, another crypto that is making a lot of wave, Cardano, ADA, something that I'm invested in personally. I've been invested in since 2017. Okay, ADA, it's on a run. Mm-hmm. It's on a run right now. A lot of times when crypto goes up, people don't really pay attention to the altcoins, but the altcoins are the alternative coins outside of Bitcoin. But Ethereum is 3,300 and ADA is $2.92. And I would be remiss to say if XRP is $1.25, XRP is climbing up as well.
Yeah, because everyone's trying to hedge in case the case goes in their favor. Then that, I mean, it's going to take off like a rocket. I will agree with that. I just don't like to invest early in things that are getting beat up. I'm going to put a lot of money to it. But yeah, if Ripple beats that case, they'll probably hit $9 in no time.
Open the floodgates.
Yeah, absolutely. And then with Cardano, kudos to Kayla. If you guys invested in ADA because of Kayla, please put Kayla in chat. But the price that I think it'll hit is 7. And here's the thing. Bitcoin is like, let's say NASDAQ. Ethereum is like the S&P 500. ADA would be like the Russell 2000 or maybe the Nikkei. The thing that I want you guys to see is how you invest in one thing is literally the blueprint to how you invest in everything else. If you ever looked into angel investing, they'll tell you about lockup periods that are usually 5 to 10 years. For those of you that invest in real estate, you usually get a good return around the 5 and then 10-year mark. Ideally, if you can hold for 30, great. The blueprint to invest in is the same across the board. They just make you think that because it's a different asset class, there's a different process. One process to be able to dominate everything and you'll be good. Yeah, so think of alternative coins as a smaller index or smaller portion of the market. Cardano may not ever lead the pack in a way Bitcoin will, but you don't need them to. Same way I told you guys last year in December, I think, to study the Russell 2000, you need to go look at the top probably 10 or 15 altcoins. And Kayla gave you a pretty dope alley-oop for free. I think it was like around $1.10 when she told you to get in it. So I hope you guys are profited well off that. And
it's important. Like you said, a lot of things have similarities. So it's like if you're investing in the stock market and you're just starting out, or even if you're seasoned, the most responsible thing to do with the less taking risk out of it is to invest in the bigger companies, right? That's why we talk about Apple, Microsoft, Google, Tesla. We always talk about all of those big companies. There's a reason why we talk about those, because they're the safer plays. Yeah. Same thing with crypto. So like my personal crypto portfolio, I have Bitcoin, I have Ethereum, I have ADA, I have XRP, I have Dogecoin, I have Litecoin, I have Stellar, I have VET, Tron, Neo, OMG, and a few others. So I say that to say, if you look at the coin market cap, most of all of those coins are in the top 10. So it's not like I had all these coins for a long time. So except for Dogecoin, I'll be honest about that, but that's a different story. But I had all these coins for a long time. So it would be safe to say that, you know, it's almost impossible if all of those coins just fall out the top 10.
Absolutely. I mean, it's no different than building a team. Like if you have LeBron, Kawhi, Melo, like Cardano may be like, I don't know. I don't want to say a basketball player and they get upset, but like Jamal Crawford or something, like super explosive. You never know when it's going to take off, but when it does, it's like, oh, wow, like this is a great addition. So when you guys are starting to build your portfolio, and the great thing, Rashad, that you do, like once you believe in something, you will hold it no matter what anybody says. Like, I'll be like, hey, what you think of that? You like, I'll give it a couple years. Like, that's why I tell you guys, like, write this down. Risk to reward ratio is the number one indicator. Number 2 is time in. If you just hold most things for 10 years, and this first homework assignment for tonight, I want you to go look at how often the things that you invest in, if you hold them over any 10-year period, how much you'll be up. Gold and probably silver may be the only things you may be drawing down on. On everything else that is volatile, and for the snipers, for those of you that trade NASDAQ, you can see the parallels and speed of NASDAQ and crypto, and how when they have booms, they have extreme booms. So they may pop up 100% in a couple of days. And when they draw down, they may draw 50% over the course of a couple months. But if you stay in for a long enough period of time, and I'll say this on record, it almost makes no sense to be a permanent bear in anything. Like you're going to get 12% over 5 years. Like, So when you guys are saying that, well, I want to short this asset, even for those you want to do puts, I'm like, why? The probability and risk to reward ratio of you hitting it out of the park, like you have to realize, like even when Michael Burry had his big home run, he had to go make a synthetic product that only he believed in. And not to say it was small, but like his return in the big short was less than 600%. He got rid of the clients. Now he's freer. Returns have been pretty damn good ever since because the client load is off, and him being his only client, as Josh talked about, like client alpha or client selection is really key. But it makes almost no sense in any game, media, music, marketing, podcasting, real estate, e-commerce, digital platforms to be short almost any asset class because you're going the wrong direction of the trend.
And one thing that everybody needs to keep in mind is that investments were not made to go down. If you really think about it, right? So somebody came up with the idea to have an investment way before a stock market. They was exchanging all kinds of stuff on different exchanges. And even when people started actually monetizing real estate and buying real estate. So the whole point of any type of investment is for it to go up over the course of time. That's the whole in a third grade explanation. Yeah, that's the premise of it. Now, in between that, it does have periods where it can go down. But the stock market was not created for it to go down. It wasn't. So when you're, like you said, when you're hedging, you just have to be careful because when you're too bearish, over the course of time, you're going to lose money because the stock market goes up over the course of time. That's what it's designed to do. If it doesn't go up over the course of time, there's no reason to have it. Right? There's no reason to have an investment if it's not designed to go up over the course of time. So this is why it is important to invest in solid companies, and we can relate this back to crypto. It's important to invest in solid coins because odds are they're going to go up. It's just a matter of how much they'll go up and how long, that time frame will be. But they all go up over the course of time if you play your cards right.
Yeah, and I know you guys are looking for gains and maybe like the bottom 10% of the market, but unless a big market maker gets behind them, and then there's enough of an audience there to keep that price above a certain ratio, it's not good to, because if you look at, Kayla's been saying like her strategy, like how I do 2 tech and 2 index, hers is Bitcoin, ADA, Ethereum. So like if you just take the top part of the crust or the top 2 or 3 in the space, that will work across the board in any sector. Like even for companies that are going to go public, I'm always going to look at the top 2 venture capital firms. I'm always going to look at the top 2 angels. For those of you in real estate, if you buy in the top 2 markets, you have a very good chance of doing well. When you are digging into the bottom 50% of the market, that's when a lot of danger begins to happen.
Yeah, go after what pays. And it's important to know who's invested in it because you can become rich by association. So like you said, if you know that, these hedge funds are investing in it and that wealthy people are investing in it, they're not investing in it to lose money. So odds are, if they're in it, it's crazy how it's like people psych themselves out of getting money because they're like, sometimes it could be too good to be true. And it's like, all right, Bitcoin, Ethereum, ADA, no. I want Sky Moon coin that's like 0.1 because if it goes up to 0.2, I double my money. But good luck. You've been warned. Not really the best way to go about it, but
don't do that.
Okay.
I read a great quote this weekend that the actions that we take are often correlated to the goals that we have. A lot of times when people are investing, they're just doing it for excitement, not to actually make money from it. So I want all of you guys to like put what is your goal from investing, and not just the generational wealth thing that everybody says because it's a cute thing to say, but like what's the real? Because truth be told, like for most Black families, by the 2nd generation, their generational wealth gets destroyed. Definitely by the 3rd for most families. Like, but once have your anchor for what your goal is. Yes, Troy has earned his leisure, but he will be coming back. But like, if that is your primary goal, you have to know. And every decision that I make has to be in correlation with that. Maybe we need to do a thing about like financial goal setting and how to hit some big benchmarks. Because that's why I'll tell you guys, like, even if you don't like my stance, if you're an investor or a trader, you can't argue with the thesis around it. You may not like the way I deliver it, or you may think that you should be in the spot. But if you are looking to produce money, it's one of the simplest strategies that's been working for 300-400 years to like invest in the top 1% of an asset class and let it continue to grow.